Okay, so you want to rob a bank, not a corner branch with a single teller, but a real vault, the kind that can hold $20 million or more in a single room. You picture the doors opening, the bags filling, and a van disappearing before anyone even knows the vault is empty. That fantasy is not crazy because vaults like that genuinely exist. Here is the problem. The number sitting inside that vault and the number that ends up in your pocket are almost never the same number. And somewhere between the vault door and your own hands, most of that fortune quietly evaporates. It gets split, it gets traced, it gets frozen, it gets seized, and sometimes the cash itself simply stops being spendable overnight. By the end of this video, a $20 million headline will collapse down to almost nothing per person. And the robbery, it turns out, is usually the easiest part of the entire plan. Before any money moves, you need people, and reliable people are the most expensive thing you will ever buy. A getaway driver, a lookout, someone who can move through a vault without hesitating, and at least one person already working on the inside, and every one of those people is a future risk you are choosing to create on purpose. The more skilled the crew, the more they expect to be paid, and the more they expect to be paid, the smaller your own share becomes before the vault door has even opened. Insider access is the most valuable ingredient of all, and it is also the most dangerous because an employee with real access can be bribed, coerced, or simply questioned by police the moment suspicion turns inward. Then there is planning, weeks or months of watching schedules, shift changes, and cash deliveries, none of which produces a single dollar of income. Every day spent planning is a day of pure expense with zero revenue, and the plan cannot start generating money until it is already finished. There is also the cost of disappearing afterward, new identities, new locations, safe houses that must never be traced back to you, and enough patience to sit on stolen cash without spending it. That last part sounds simple. In practice, it is one of the hardest and most expensive disciplines in the entire criminal world. Here is the first quiet trap. Every additional person you bring in to lower your operational risk simultaneously raises your financial risk, because every new person is another mouth that must be paid and another person who might eventually talk. So even before the vault opens, your theoretical fortune already has invisible shareholders, and none of them signed a contract you can enforce in court. If someone decides they deserve more, your only real form of dispute resolution is violence, and that is a cost layered directly on top of everything else. Now assume the robbery works exactly as planned, and the vault gives up its headline number in full. That number was never really yours. It was always going to be split. Divide $20 million by a crew of 6, and the number changes from a lottery jackpot to a little over $3 million each, before a single expense is subtracted. That is the first shrink, and it happens before you have spent a single dollar of it. The second shrink is worse, and almost nobody accounts for it in advance. Physical cash from a real vault is rarely a neat pile of anonymous bills. Large denominations are frequently recorded by serial number, and newer or uncirculated notes can be tracked the moment they resurface anywhere in the financial system. Some of that cash may even be marked or dye-stained specifically to make it useless the instant anyone tries to spend it. So a meaningful share of your headline number might already be financially radioactive before you have even left the building. Here is the open question worth sitting with. What is stolen money actually worth if you cannot spend it without being caught? In several real cases, banks have gone even further than tracking. They have simply declared the entire stolen currency worthless. Imagine spending months planning a robbery, only to have the institution you robbed change the money itself weeks later. That is not a hypothetical, and it turned tens of millions of pounds into commemorative paper for the people who stole them. Assuming your cash survives that risk, you still cannot simply deposit stolen millions into a bank account. You need to launder it, converting it into property, businesses, vehicles, or clean bank balances that will not trigger questions. Laundering is not free. Professional launderers typically take a meaningful cut for themselves, often a large percentage of whatever passes through their hands. So your $3 million share is now smaller again, purely for the privilege of making it usable at all. And every laundering transaction is a new opportunity to get caught, because financial systems are specifically built to notice large, unexplained movements of cash. Even after successful laundering, authorities in many countries can still pursue forfeiture, seizing assets they believe were bought with criminal proceeds, sometimes years after the original crime. That house, that car, that business you paid cash for, none of it is safe simply because you already spent the money. So here is where the headline number actually stands. Split among a crew, discounted for tracked or marked bills, taxed by launderers, and exposed to forfeiture indefinitely. A $20 million heist can realistically leave a single participant with a small, single-digit percentage of the original number, and that is if nothing goes wrong. Something almost always goes wrong, and nothing demonstrates that shrinking math better than what has actually happened inside real vaults. Here's a number worth pausing on first. According to the FBI's own bank crime data, the average American bank robbery nets the robber somewhere around $7,000, nowhere near the vault fantasy this video started with. So the two robberies you are about to see are not the norm. They are the extreme exception, which is exactly why their math is worth studying in detail. On a December night in 2004, an armed gang in Belfast pulled off what is still considered one of the most efficient bank robberies in British and Irish history. The families of two bank officials were held overnight to guarantee cooperation. The vault was opened the next morning using entirely legitimate access, and the gang walked away with just over £26 million, driven off the premises in more than one trip, because there was simply too much cash to move at once. No alarms were triggered, no shots were fired. On paper, this was the perfect robbery, clean, quiet, and enormous. But here's the twist nobody in the gang saw coming. Northern Bank did something almost no robbery victim had done before at that scale. It redesigned its own banknotes and declared the old ones invalid. Within a few months, roughly £240 million worth of notes across the entire currency were pulled from circulation and reissued in a new design. Suddenly, a large share of the stolen £26 million was not just hot, it was worthless paper unless it could be exchanged before the deadline quietly closed. Investigators later recovered only a small fraction of the total, including a few £1,000,000 seized from a financial advisor, eventually convicted of laundering part of it. 2 decades later, nobody has ever been convicted of the robbery itself. Think about that for a moment. The perfect heist, and the getaway still failed financially for almost everyone involved. The lesson is not that crime does not pay because you get caught. Sometimes crime does not pay because the money itself simply stops being money. That is one way for a headline number to collapse. Now watch a completely different way, on a completely different continent. In August of 2005, a different crew spent 3 months digging a tunnel, roughly 80 meters long, underneath a central bank vault in Fortaleza, Brazil. It remains one of the most technically impressive bank robberies ever documented. They emerged with roughly 164 million reais in cash, worth around $70 million at the time, so heavy in low-denomination bills that it had to be hauled out in multiple containers. The branch itself was uninsured, because the bank had decided years earlier that the odds of exactly this happening were too small to justify the premium, which meant, on paper, the entire amount was simply gone. For a moment, this looked like the platonic ideal of a successful robbery. Then the money had to actually be moved, hidden, and spent, and that is where nearly 30 different people entered the picture. Vehicles stuffed with cash were intercepted hundreds of miles from Fortaleza, and property and vehicle dealership purchases quietly flagged investigators onto the trail. Federal police eventually recovered only about 53 million of the original 164 million res, roughly a third of the haul, and dozens of people connected to the case were eventually arrested. But recovery by police was not even the most dangerous threat to the participants. Because stolen cash can never be reported missing, it made an irresistible target for other criminals. Several men connected to the robbery were later kidnapped and held for ransom over their share, and at least one financier was killed months afterward, even after a ransom had already been paid. Read that again. Committing the robbery successfully did not protect the money. It just made everyone holding it a target with no police protection available to them. Between recovered cash, laundering losses, and violence within their own crew, the group's true realized profit fell dramatically below that headline number. Two of the most sophisticated bank robberies of the last few decades, and two completely different failure points. One lost its value to a printing press. The other lost its value to greed, exposure, and its own participants. So let's write the invoice for modern bank robbery. Line 1, your headline number, the fantasy figure, the reason you considered this in the first place. Call it $20 million. Line 2, the crew split, dividing that number among everyone whose silence and cooperation you needed. Your theoretical share just fell to a few million. Line 3, tracked or marked currency, discounting whatever portion of the cash cannot safely enter circulation. Line 4, the laundering fee, paid simply for the privilege of making your own stolen money usable. Line 5, forfeiture risk, a debt that can be called in years after you think the case is closed, sometimes long after you have stopped worrying about it. Line 6, and this one rarely makes it into anyone's math beforehand, the years spent looking over your shoulder, unable to explain a new car, a new house, or a sudden vacation to anyone who asks. Divide whatever remains by the months or years spent planning, executing, hiding and laundering, and calculate an honest hourly wage. In case after real case, that number lands closer to a bad part-time job than a criminal jackpot. Then add the costs nobody puts on a balance sheet at all. Legal fees if you are caught, prison years if you are convicted, and in some cases, as Fortaleza proved, the very real possibility that other criminals take the money and take your life along with it. The vault never lied to you. $20 million really was sitting in that room. What it never told you is how few hands that number would survive passing through before any of it reached yours. Every additional person, every additional transaction, every additional year on the run is a line item quietly written against your original fantasy. By the time the real invoice is totaled, the headline heist and the money you actually keep are barely related numbers. So if you are still picturing that vault door sliding open, that part of the fantasy is accurate. Just remember what the door was actually guarding. It was never guarding a fortune. It was guarding a receipt, and your name was already being added to it.